Hey guys, can you hear me now? Testing, testing. Let me know if you can. Now you can hear me. Welcome, welcome, welcome. I am super, super tardy. I'm so sorry about that. It's Monday and it's, I'm in Arizona, which I don't know what time zone that is. It's an hour ahead of California time. Mountain time, is that what that's called? I can't see my chat. Can you bring your laptop over and put it right here? So it's 9 p.m., 9:19. And sorry about the live stream from earlier, but I had connectivity issues. I'm traveling. Actually, I'm driving from Los Angeles to New York City. Super, super far. And I didn't have a connection. I was in the Mojave Desert at 12 o'clock Pacific time earlier today, and I couldn't connect. All the due diligence I was doing, there was no ability to connect. But the good news is I didn't forget about you guys, and I apologize for my tardiness. I figured I would just jump on a quick live right now just to kind of let you guys know what happened earlier today. Please don't be mad at me. And I will be back on Monday because I will be back in New York for sure. Probably on Friday. I'm not sure exactly what day yet. But Monday at 12 p.m. Pacific time, 3 p.m. Eastern time. I will be on the live stream. And I will also do a live stream if I add to this account, make any changes. So I know last time we talked about, and I walked through the trade that I had, which was a short put on Riot, which ended up expiring worthless. So you guys probably know when when a short put expires worthless, you keep all the money, the risk is over, and then you move on. So I'm probably not going to put any trades in at the moment because, as I said, I am driving. I'm driving with my daughter and my little puppy, Franklin, in a super small account. I drive a Porsche 911, not to brag, but to say that it's a very small car that I'm taking across the country. So right now I'm in, where are we? We're in Sedona, Arizona. Sedona, Arizona, that rhymes. And tomorrow morning we're going to go check out some vortexes, which I don't know if any of you guys are familiar with Sedona. It's actually a super cool place, super spiritual. And yeah, we're making our way across the country. So let me just take a look. Why are you driving from California to New York City? Why not? I guess that's a good question. The biggest reason probably is that I'm bringing my puppy, who is still a puppy, but he's a little bit bigger now. He's a mini golden doodle. So he's not super big. He's about 14 pounds, I think. And he's getting kind of big for the little bag that you put a dog in when you fly. And also I'm going to spend some time in New York City, and I figured let me just bring my car back. So yeah, it's for a couple different reasons. And driving is kind of cool. I don't mind. I did drive cross country one other time. And I also drove from down the East Coast once many, many years ago. And it's kind of cool. So me and my daughter and the puppy are making sort of a time of it. Let me go through some of the questions. I also have to, at some point, fix my technology because for some reason I can't see the comments, but I have my daughter's laptop next to me so I can see it here. And I'm happy to see you guys on here. I have to also check. I think you guys get a notification when I go live. So I think that's why you guys hopped in, and I appreciate that you guys are here. Give me some questions. I want to go through some good questions. I figured let me just come on now and apologize for my tardiness and missing the session earlier. It was out of my control. And also, I'm happy to answer some questions about trading. I know the market's been super, super down. Listen, when the market comes down, it's a great time if you have cash to sell a put because as prices come down, premiums on puts are more expensive, right? So you're going to get paid more for the risk that you're taking. And if you get assigned those shares, you're buying stock that you like anyway at a discount, right? Because selling a put, you're committing to buy those shares if it drops in value. So that's the best time to buy it, is when it drops at a discount. Let me see if I have any questions here. Somebody's asking about IRBT puts. I'm not sure I'm not familiar with IRBT, but let me take a look. Let's see, IRBT. Oh, that's $1.18. Holy cow, that dropped a lot. So what is that? iRobot. Let me take a look. Usually when I'm not familiar with something, I just kind of check it out like this, IRBT stock, and see what it does. American technology company that designs and builds consumer robots. So it looks like they gapped way down. I'm not sure exactly what happened. I'm not familiar with this particular ticker. There was another ticker recently that I saw, RZLT, I think it was, that did something similar, dropped way, way down. The one thing that you want to be concerned with when stocks drop, let's say to a $1 level or something like that, is a reverse split. So you don't want to experience a reverse split. Very, very negative for a company. So yeah, I'm not sure. Somebody can jump in if anybody else is holding that, but I personally haven't been familiar with that. Let's see, anyone get a notification that we would be starting at a different time? Yeah, sorry about that. So initially, let me explain to that to you. Initially, I set up the live stream. So the way I do it technology-wise is I schedule the live stream. And lately, I've been back and forth a bit, New York and LA. And as you guys probably know, it's a 3-hour time difference. And I think sometimes what happens is I set it for 3 o'clock, and I was thinking it was Eastern, but it was actually Pacific. So that was the reason for that. I will definitely figure that out moving forward. These sessions will be every Monday at 12 Pacific, 3 Eastern, as well as anytime I make a change in the portfolio or I want to jump into the portfolio to go over something. And those times will just kind of be sporadic. I had to actually do something with my YouTube account. I'm not really a YouTuber. So really, like my history is just being a trader. So I've been trading for many, many, many years. And I've had content for a while. I never really did it as a business as much as, let's say, as a hobby. I love actually talking about options trading and things like that, helping people. But my point is that I'm not super familiar with how the technology piece goes. So I need to figure that out with YouTube and see when I can just hop online on my phone, let's say, without using some sort of a platform like I'm using now. So I'm working on that, so stay tuned for that. Yeah, it originally said 6 p.m. Eastern, but it was actually 3 p.m. Eastern, 12 Pacific. So thank you for adding that. Let's see. Let me see if there are some questions here. So Draco1 says, I started trading options late October this year. I'm up 15%. It works. Just be strict and follow your rules. Bravo, Draco. And I don't know if I'm pronouncing your name right. Apologies if I'm not. But yeah, I mean, that's important. Just be strict and follow your rules. Listen, there are not that many rules when it comes to trading, but you want to kind of identify a few of them. One rule in particular that is important to me is risk, right? I've always said that it's very, very, very easy to make money and harder not to lose it. When we think about risk, we want to think about a few different things. We want to think about, margin can be very problematic. Oftentimes we don't understand, if the particular ticker drops a certain percentage, do we have enough money in the account to withstand that drop? So that's something that is usually the main, if not only, reason that actually blows up an account. So you want to take care of that. And then also, I guess along the same vein as that is position sizing, right? So right now, the past couple of days, there were lots of things that were down pretty significantly, right? So if you don't have cash on the side when something comes down, then you don't have any more capital, right, to sell another put as it comes down. And the best time to sell puts is when the price comes down. And in fact, if you already have a position, and let's say I just use a round number as an example for illustrative purposes. Let's say I have ABC stock and I paid, 20, 30 bucks, let's say 20 bucks for the stock, and then it drops to 15. The best way to combat that position as it drops in value is to sell another put. And if and when you get assigned those shares, you're going to be averaging your cost down. So in order to do that, though, you have to keep cash on the side. So another big way that oftentimes traders will, I would say, get themselves into trouble is because they're too like cowboyish, you might say, right? They kind of go all in at the beginning, pretty heavy, particularly when things are going well. Everybody's euphoric when stocks are going up, and then when stocks start to slide, if you don't have enough cash, like I said, it's a little bit problematic where you miss a lot of that big move that you could be making, you know, had you had cash to sell another put, that sort of thing. So yes, so Draco, being strict and following your rules, super, super important. And well done on the 15%. Love it. So Jerry says, I think it's Jerry. Hi, options queen. I love that. Hello, hello, hello. I am finding it hard to identify where to find how much premium I can earn on the stocks I'm looking at. I sold my first put and I earned 34 cents. So that's great. So 34 cents, I'm assuming that you're referring to the premium, 34 cents, meaning $34 in your pocket. Let's see, you're finding it hard to identify how much premium you can earn. I'm not sure exactly what you mean by that, but the way you want to see the premium, I'll just kind of go in here. Here's my platform. You want to, this was a IRBT, so I'm not super familiar with that. I'll just look at NVIDIA. I was looking at that earlier, just as an example, 176 per share. And let's say if you're looking at the puts, which is on the right-hand side here, you're just going to look at the last price, and then you're going to multiply by 100. That gives you the dollar value of the premium that you would take in for that particular contract. You want to always calculate your rate of return. So always do that. Super, super easy. You're just going to divide the premium that you make. Let's say you make $100 on a contract, and let's say you're selling a $10 put. So you'd have to put up $1,000 in case you had to buy those shares. You're going to divide the premium divided by the capital that you need to give you your rate of return. And then you're going to kind of annualize that out. So right now is Monday evening. You could do that a couple ways. You can do like just a quick way, times 52, even though you'd be holding it for, let's say, 4 days because it's Monday right now. Or you can, divide by the number of days and then multiply by, either 365 days, which is the number of days in a year, or I usually use 252, which is the number of trading days per year. So whatever. I'm not sure if that was exactly what your question is. A little bit hard to understand exactly what your question was, but hopefully that helps. Also, I see some crowns here. I want to say, I want to just make a quick note. I have a bunch of people that joined my Discord lately through YouTube because I can see them as members on the YouTube side. But for some reason, I don't yet see them in Discord. I see some people, but not many people. So you have to, if you've joined the Discord membership community, which by the way is $5 a month, if you join through a laptop. If you join on your phone, I think like if you have an Apple, an iPhone, typically it's like, I think they charge iOS like App Store fees, so it might be higher. So I would say join on a laptop, it's cheaper. But my point is that I haven't seen too many people link their Discord to their YouTube. So make sure you do that. So just keep that in mind. So Jerry says, I like the stock you went over, SMCI. Can you help me identify the premium on the Schwab trade platform? So let's take a look at that. I'm happy to help you out, Jerry. So I'm going to pull up SMCI, and I'm just going to add it in the watch list here. And I just want to take a look, and I always just kind of start with a 52-week chart. What was your question? Help me identify the premium. So here's, you can also change this, by the way. You can show fewer strikes and then it's less busy on the page, or you can show everything. So right now SMCI is $31 a share, 31.37. Strikes are down the middle, right? A few things that I look at, which is bid, ask, last price. I have some delta here, implied volatility, open interest, and volume. But you're asking about helping you find out the premium. So let me walk through that with you. So let's say, for example, I'm just going to start with a $30 put, right? So first of all, I want to make a couple of clarifications and observations for you. The closer you are to where it's trading now, so it's trading at 31.37. So let's say you sell the $31 put, you're going to get paid the most money, right? Because it's closer to where it is. And here's, Jerry, where you're going to see the premium. So we see a few things here. We see the bid column right here. We see the ask column here, and we see the last price column. Now, right now the market's closed, but this is the last price at which it traded. So let's say, for example, I'm going to look at a $31 put. If I put a trade in to sell a $31 put, and I use the bid price, notice how the bid is a lower dollar value than the ask price. If I put an order in to sell at the bid, it will automatically be filled. Meaning, if it's 0.67, I'm going to multiply by 100 to get my premium because each contract represents 100 shares. So that would mean that $67 gets dropped into my brokerage account right away. I could sell a put that's somewhat between. So typically, and I want to get too much in the weeds, and this live is going to be quick because I just wanted to kind of hop in, apologize for earlier sincerely, and then answer some questions while we're here. But just to kind of follow along these lines, it's Franklin squeaking in the background. If I were to use the mid price, if it's 67 bid, 73 ask, if I put an order in at $70, 0.7, it may or may not get filled, right? Oftentimes, if I put an order in, let's say 1 penny below the mid price. So for example, on this example here where it's 67 bid, 73 ask, if I put an order in to sell that contract at 69.69, it would probably get filled, but it would certainly get filled if I put an order in at the bid price, because the bid price represents what buyers are already waiting for. So that means that the contract would fill right away at that particular price. So you're going to see the price, Jerry, as far as the premium goes, you're going to look at the price and then multiply times 100 because one contract would represent 100 shares. So I hope that helps. Let me know if you want any clarification on that. Let's see. Let me see some more questions. I started with 1,100, and after the trade, my account was 1,134 cents. So here's the thing. You want to keep this in mind. When you make a trade, you're going to have a value to that particular contract as time goes on, right? So the value of that particular contract is basically just representing if I was to trade this or liquidate my position, if you already sold that put as an example, how much would you get for it? So you don't really want to pay too much attention as to your paper value of your account, because that's kind of like stock. It's going to go up and down with the market. But you want to just keep in mind what's most important is your realized gain, right? So your realized gain is the most important thing. How much cash did you make? So for example, let's say I was to sell this $31 SMCI put, right, for $67, 0.67, so $67 gets dropped into my account. One of two things is going to happen, basically, just to walk through the structured fundamentals of this. Come Friday, when this contract expires on the 19th of December, SMCI will be more or less than 31 bucks. So if I sold a $31 put, if it's higher, that means I'm not going to buy the shares, right? I keep the money that I got paid, right, the premium. If it's lower, I still keep the premium. And if the stock closes below my strike price, I'm going to buy 100 shares of that stock, right? So that's what that means. And then I'm going to turn around and sell a covered call. So we're going to do that in my account. Right now, I just have cash in that $5,000 account, and the reason being, right here, the reason being is because, I sold that put last week on Riot, and it expired worthless, and right now I don't have anything. And I don't want to trade anything at the moment, and the reason is this. It's really easy to make money. It's harder not to lose money. And because this is my account, like my real money, 5,000 bucks, I don't ever want to wing anything. Here's how I look at money. you know, how you treat $5,000 is how you treat $500,000. Like, even though it's a small dollar account, I don't want to just throw a trade in. And right now I'm just focusing on driving back from LA to New York. And I don't want to be tied to my laptop. I don't want to, like, you know, what if something happens, or, you know, not have connectivity, that kind of thing. So I'm just going to wait until Monday. I'm just going to keep cash in there. There's no rush. Listen, trading is all about, like, it's a journey, right? It's kind of like life. Life is a marathon, not a sprint. But what I'm saying is, as I put a trade in next Monday and beyond, it's going to be easier to walk through that. So I hope that helps answer your questions. Let's take a look here. Do we sell the put out of the money or in the money, above or below the strike? Okay, let me answer that. That's a great question. Hey, Nina, can you tell me why all these comments are restricted or retracted? Just maybe take a screenshot of that. I don't know what that means. Yeah?
That's just from one person.
Okay, just take a screenshot. Okay, so let me answer that question for Trinity Crown, right? Do we sell the put out of the money, in the money, above or below the strike price? It depends on what your intention is, right? So when we sell a put, what we're doing is we're saying, I'm committing to buy that stock if it drops below the strike price before the contract expires. If it doesn't drop below the strike price before the contract expires, I don't buy the stock. Either way, I keep the premium. So having said that, I never sell a put that's in the money. So for example, the way I look at things, let's continue with looking at SMCI since we have that up. I always start with looking at a 52-week chart. I just want to kind of get a sense of where the stock has been, right? I mostly choose the ticker not based on the price, but based on the what the stock is, right? Like, you know, do I like the company? Do I see myself okay with holding that stock for a period of time, you know, if that stock drops? So it's not so much about the price. It's more like, you know, how do I feel about this particular ticker, right? So having said that, let's say I identify a ticker, as an example, this one, SMCI, and let's say I really like this ticker. Well, right now, if it's trading at $31.37, usually what I do is I want to kind of go a little, I don't want to say too far away, but I want to kind of go far away a little bit from where it's trading. Because if I can drive an income off of just keeping cash in my account, that's way better than having shares of stock and then being subjected to like paper gain and paper loss, paper fluctuation. So typically I look at delta. So delta is going to be kind of like the cheat sheet way, the statistical likelihood of how likely the stock is going to drop from where it's trading, 31.37, all the way to the strike price before the expiration date. It's not an exact science. It's not like black or white, but it kind of gives us a sense of likelihood, right? So for example, let's say I start with, you know, a 23 delta, okay? So this particular example is saying that SMCI has approximately 23% likelihood that it's going to go from where it is now, which is 31.37, all the way below 29.50 before Friday, right? So 4 more trading days. And for that commitment to buy 100 shares if it drops below 29.50, this last traded at 26. So it's 26 bid. Let's say it opens the same way where it is now, because it's after the market closes. But let's say it's morning time on the East Coast in New York, and it opens like this. If I was to sell a put, a 29.50 at $26, it would be filled right away. So generally what I do is I kind of like, okay, well, first I think about what's the stock? Do I like that stock? Number one, right? Number two, let me look at the delta, right? So this is 23. Next, let me calculate the rate of return. So let's take a look at that. I think you guys can all see my screen, and just let me know if you can't. But let me calculate the rate of return. For example, if I'm making $26, right, on this particular contract, and I'm putting up $29.50 in capital, and the reason it's $29.50 is because it's $29 50-cent put, so I'm committing to buy 100 shares. Well, that gives me a rate of return of about 0.8%, right? Now, sometimes what I do is I just, okay, let me just do it, like a approximation, right? So let's say if I did a trade like this every week, I just multiply it by 52. So that would give me a rate of return of about 45%. And then I think, okay, well, how does that feel to me? Do I like a 45% rate of return? Do I want to go a little bit more aggressive? And aggressive meaning a higher price on the strike. So let's say if I sold a $30 put instead of a $29.50 put, then I'm making more money, right? But it's a little bit more likely that I might have to buy those shares, right? So let me calculate that rate of return. So a $30 put, the bid is 36. So that means if I put an order in at 36, it would fill, right? So I'm gonna divide 36 into 3,000. Well, now I'm making 1.2%. So it's a little bit higher, right, than our last example. And now my annualized rate of return, if I did this weekly, now it's a bit higher, 62. So you see how how you look at the strike prices is if I want to go higher, right, closer to where the stock is trading, I'm going to get paid more money. My rate of return is higher. So ultimately, the decision is up to you, right? So how much money do you have? How okay are you to buy 100 shares of that stock? Do you already have 100 shares? So what I mean by that is this. Let's say I already have 100 shares of SMCI and I paid $35 for it. And let's say the stock has come down a bit. In that case, I might want to go a little bit closer, right, to the money. And the reason for that might be I make more money, and then if I had to buy the stock, I'm still averaging my cost down. So it really depends on the scenario. You want to think about, what price are you okay purchasing 100 shares of that stock if it were to drop. But me personally, I don't think I've ever sold a put that's in the money, right? So if the stock is trading at 31.37 right now, I would not sell a $32 put or a $33 put. You're going to get paid more money, but it's in the money already, and so I wouldn't do that. I would sell one for sure lower. So that's a great question. Appreciate that. Let's take a look. One more question, and then we're going to wrap it up, and I appreciate you guys being here. Let's see. So Paul says, I sold Irene. Oh, I like Irene. So I had never heard about Irene before. And somebody had mentioned this a while back. I think there's some sort of crypto type company. Let's see. So I sold Irene, $40 put, expiring on January 9th, 26. The stock is now $35. So I'm $5 in the money. It looks like it's going down to $30 per share now. Thought this company had decent fundamentals, but now not too sure. Okay, so let's walk through that, Paul. So let's take a look. First of all, let me just refresh I've never traded Irene myself. I'm familiar with it. Somebody else was talking about it before. What do? Let's see. I usually use Google for this kind of stuff. Irene is an Australian company rapidly evolving from Bitcoin miner into AI. So a lot of companies are kind of getting into the AI space. And here is a 1-year chart on them. So they have been kind of dropping pretty significantly. Right now they're $35 a share. Let's take a look at the January 9th contracts. So I'm going to just close this 119, and I'm just going to go to January 9th. And let's take a look. So Paul sold the $40 put. So right now the $40 put, it is in the money, right? So that's what we call in the money because you're committing to buy 100 shares at 40 if it goes below 40, and right now it's at 35. So a couple points that I want to make out. Let's kind of walk through this methodically. So first of all, the implied volatility is very high, right? So 82%. And that means that there's a lot of swing. So the way I look at that, when there's a lot of swing, I wouldn't get super sad or think, oh my gosh, like I made the wrong choice, Paul. As an example, it doesn't necessarily mean that you did anything wrong. It's got a lot of swing, which means that even though it drops down, it can very easily pop back up. So that's good. And it also has some healthy open interest, 1,000, Volume is how many contracts were traded today. So it's pretty healthy. It's got a little bit of a spread between the bid and the ask. What that means is it's 640 bid, 695 ask. It's not super terrible, but there's a little bit of space in between those two. I would encourage you to look at it like this. Two things. Number one, if you sold this contract and the price is coming down, this contract is probably trading at more than what you originally received in premium for this. And then correct me if I'm wrong in the chat here, but I'm assuming that that's the case. So you probably, depending on when you sold it, maybe you got like, $300 plus or minus, something like that. And if it's trading right now at 670 as an example, that means you're going to have a short-term paper loss, right? Now remember, with short-term paper losses or paper losses in general, it doesn't really mean anything unless you actually liquidate your position and take a loss, take a realized loss on it. Because this just reflects kind of like if you liquidated your position, how much would you get? As long as you're okay holding that, I would encourage you not to be so concerned about the paper loss. And then if you have to buy the shares, you can turn around and sell a covered call on it. Now, one thing you want to be conscious of, which maybe you probably already know this, is as the price comes down, if you end up buying the shares at $40, sometimes you're not going to make as much to sell a covered call because it's kind of coming below what you paid for the shares. But again, this is a stock that has some volatility. So like if we look at, let's say this time frame here, it went from, I don't know, 74 bucks a share, went down to, $49 a share, right? So you guys can see my cursor here. And then what did it do after? It pops back up again. So again, volatility shows you that it goes up a lot and often and goes down a lot and often. Is this a stock, like you mentioned in the comments here? I thought the company had decent fundamentals, but now not too sure. That's something that really you have to kind of like think through. But I wouldn't be so quick to, let's say, throw in the towel because these stocks do have volatility, so they come up and down. One thing I might suggest to you is look at the Edgar page. So SEC Edgar, that's a great page to take a look and see of, okay, have there been like, did somebody just sell a big chunk of that stock? Or is there earnings coming up, something like that. So let's go through the Edgar page as an example. So this is going to show insider trades. So this shows any officers, directors, or controlling shareholders of any publicly traded company. They have to disclose through the SEC and really to the public ultimately whenever they buy or sell something. So sometimes if I'm trading something and I'm not too sure or it's going down and I'm not sure exactly why that is, I kind of go in here and take a look. So this kind of shows you, ownership disclosures, people that took a controlling ownership position or added to an ownership position, that sort of thing. There's nothing really. We're in December, so these are kind of dated. These are way back in September, so that's really not going to affect the price. You might want to look at 8K. It looks like they probably just did earnings. You might want to take a look at some of this information just to kind of see. Let's see, Irene earnings. I think they just declared their earnings recently. Or no, next. Oh, that's my birthday, February 11th. Very cool. So those are some of the things that you might want to take a look at. But I wouldn't throw in the towel because, it is a popular stock. It's got a lot of volatility. Let's see. They're profitable. So if I look at the earnings, I just kind of, sometimes I'll hover over the earnings icon here. So this will tell you, the last earnings was 14 cents. So if they were not a profitable company, their earnings would be negative. So they are a company that makes income. I can add this to my list to do a video on it, upcoming video, and see if I can dig a little bit deeper. I'm not super familiar with the company. But anyway, I hope that helps. Okay, one more question. MSFK Joe, howdy. I bought an in-the-money put because I was bullish on stock recently, and luckily it went up and it worked out this time. Cool. So bravo to you. I don't talk really about buying puts or calls ever on this channel because I don't believe in it. I truly, truly believe, and it's great that, and I'm happy for you if you made money. There's a big difference between buying options and selling options. When you buy options, it's like, in my view, it's like gambling. It's like going to the, to the convenience store and buying a lotto ticket. You could hit a jackpot, but the likelihood of you doing so is very, very low. Or going to the casino and pulling the slot machine and hitting a jackpot. You could hit a big jackpot, but it's not very likely, right? And when you buy a call or buy a put, you have to not only be right about the direction, meaning, that it's going to go up or go down, but you also have to be correct on the timing. When you buy puts or calls, for that matter, time is not your ally. Like, time is your foe, right? Because as time goes, it erodes the price. So that's why it's so great for option sellers. Me, I'm an option seller all day long, every day. I don't believe in buying options ever. I think it's a sucker bet. I think maybe sometimes you can make money. More often than not, you lose money. Most options expire worthless, and yeah, can you get lucky sometimes? For sure. But I don't know if the market's going to go up or down. And I don't pretend to know. And I just want to make money, income on a regular basis. So if you're looking for, let's say, tips on buying options or something like that, this is not the channel, because mostly I'm always talking about selling options, taking in income and selling a put and committing to buy shares if the price drops. If it doesn't drop, I don't buy the shares. Either way, I keep the cash. Worst case scenario, when you sell a put, I'm going to get a stock that I like on sale. It's cool, right? And when I sell a covered call, hey, I already got the shares and I'm taking in extra cash, and I keep that no matter what happens. And if the stock goes up, I sell my shares at more than what I paid. If it doesn't go up, I keep my shares, I keep the premium, and I do the same thing next week. So selling options is my wheelhouse, I guess you'd say, and that's all that I ever trade. Yeah, I'm here to make income, consistent income, and use that to sustain a lifestyle rather than perhaps getting lucky sometimes. So anyway, I hope that helps. We're going to call it for now, but I'm going to be back on Monday. Once again, I just kind of hopped on quick because I did want to say, hey, I had that tech issue earlier, driving across the country, which is an experience, I have to say that. But Monday and any other day in which I make a change to this portfolio, I'm going to hop in on the live stream here. And if you don't catch it live, it's always going to be on the recording. And I appreciate you guys being here. Check out the series I'm doing. I'm doing this really cool. I just made a super cool video that I'm going to drop tomorrow. I'm doing this series on these tickers under 20 bucks because I get a lot of people on this channel that ask about, hey, I got a small account. Give me some different ideas to trade. And I just made a really good video. I have to edit it, and then I'm going to schedule it for tomorrow. So stay tuned for this series. It's actually pretty cool. Anyway, hope that helps. Thank you for being here, and cheers for now.